So, Laura, we've talked about life insurance and the importance of having life insurance if you have a family and a mortgage or
Yeah.
one or the other. Are there any other insurances that families should be thinking about?
There's a couple of other insurances. You've got critical illness cover. And as it sounds, critical illness, you have to have a specified critical illness to be able to claim on that policy. Critical illness essentially provides a lump sum payment. So that means if you were unable to work, if you had a heart attack that was diagnosed as severe enough to meet the conditions, the insurance would pay out a lump sum. That would then mean that you could either stop work for a period of time to recover and cover your finances. You could repay some of your mortgage, or if you were needed adaptations to the home, you could potentially then fund home renovations to make the house in an acceptable sort of widened doorways if you were wheelchair bound and things like that.
Okay. Have you had any experience of people making claims on critical illness cover?
So I have heard of a scenario where somebody unfortunately had leukemia. That then meant that they received a lump sum payment from the critical illness cover. They then used that lump sum payment to clear their mortgage completely down to nothing. And in this example, the client made a full recovery. So it was obviously terrible, the fact that they've had a really bad condition, but it took that financial pressure off at the time, and their mortgage is now repaid, which has meant that they can go back to work, but maybe they don't need to go back to such a high-powered job, or they can go back part-time and have a bit more of a family time rather than focusing on the finances.
And that lump sum, is it typically tax-free or is it taxable?
Tax-free. So it's normally paid as a lump sum, tax-free. With life cover, we normally recommend that that's placed under trust. By placing it under trust, it pays out quicker on death. And it also means that it's normally outside of your estate for inheritance tax, because the last thing you want to do is be paying for a life cover policy, say 100,000, that then falls within your estate for inheritance tax, and then you lose 40% of it to inheritance tax
Yeah.
if you're already over your thresholds.